Hi, I'm Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. It's February 18th, and today I want to dig into the question, what can we do about inflation? Is it better to rent? Is it better to buy? So I'm going to start out with a quote from Bankrate from James Royal. A fixed rate mortgage allows you to maintain the biggest portion of housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but your monthly housing payment remains the same. That's certainly not the case with renting. Fixed rate mortgages lock your payments at today's interest based on today's price. Interest rates and home prices are both forecasted to increase going forward. The other option is to rent. So let's look at first rents versus inflation. What do we see in there? So this chart, the blue line is the inflation rate year over year, and the green line is the rent increase rate. And you can see most years the green line is actually above the blue line. This means that rents are increasing faster than inflation. So you're losing money to inflation, and you're also losing money to paying higher and higher rents every year. Another quote from Investopedia: real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. So if you've gone to the grocery store to buy groceries or to the gas station, I'm sure you've seen prices going up. If you're looking to buy or sell a house and you're paying attention to the real estate market, I'm sure you've noticed that real estate prices are also going up. They both move together. And let's see how over time that has worked. This chart is similar to the one that we just saw. The blue bars are inflation, green bars are home price appreciation. Except the 2000s, green bars are equal to or higher than the blue in every case. Now, the 2000s were a special case themselves because they had the big housing crash in the 2007-2008 range. Prices ran up massively and then dropped off dramatically. As we see, the green bars for the most part are higher than the blue bars. What this means is the value of your home is increasing more each year than the value that you lost due to inflation. So you're making money. Another quote from Forbes: homeowners are shielded from mounting rental prices because their cost is fixed, regardless of what's happening in the market. Tangible assets like real estate get more value over time, which means buying a home is a good way to spend your money during inflationary times. This survey is a good little peek into what we expect to see going forward for housing prices. It's a home price expectation survey between now and 2026, 100 plus economists. They looked at what they thought the price increases for homes would be. The average is about 43%. They split that group up into those that were pessimistic with their price increases and those that were optimistic with their price increase estimates. And even the pessimistic group said almost 25% increase. So the question that I want to leave you with on this one is, would you rather pay increasing rents in a time of inflation where you're paying increasing prices for everything else, or would you want to pay the same amount every month for the principal and interest and watch the value of your home increase? Changing subjects really quickly, I hit on mortgages every month, and we can see this is the Freddie Mac primary mortgage market survey done yesterday. It's done every Thursday. 3.92%. So we're up from 3.69 last week, which was up from 3.55 the 3 previous weeks. And as you can see in the chart, it looks like we're going crazy. It's going really high. But I want to put a little perspective on this. This is another different view of the same information I've put out before. This chart shows that at our current rate of 3.92%, we're below the average for the 2010 decade of 4.09, and we're well below every decade previous to that, going all the way back to the 1970s. So although we're not at the all-time lows that we saw a year ago, 18 months ago, we are still near historic lows, and a 3.92% interest rate to purchase a home is still a very favorable interest rate when you look back in history. So I hope there's some value that you got from this. If there was, please click the like button. You can also subscribe and hit the notification bell. I put out content every week, videos just like this. My winter buyers and sellers guides are available. The links are in the description below. You can feel free to grab those. There's no obligation. And also, I did put out a video last week about, are we in a housing bubble? And a lot of people have watched it and had a lot of good comments. So I'm going to put that link down in the description as well, so you can check that out. Thank you for joining me, and I look forward to talking to you next week. Have a great day.